The banking crisis is looming in the United States. All right. Now, what I'm going to talk to you guys about in this video is why we are seeing $100 billion leaving the 5 largest U.S. banks. Okay. So this is going to be a very informative video. I hope you guys enjoy it. Please stick around to the end. Hit that subscribe button to get this content out to other people. Give us a like and follow us on Twitter. All right. But let's get into it as we talk about what is going on as Bitcoin is adding $200 billion and $100 billion is leaving the 5 largest U.S. banks. Okay, so we are seeing the United States banking crisis continue, all right, and several casualties have thus been reported, all right. So we are seeing what is going on, the Silicon Valley crisis, okay, and we are seeing basically Bitcoin becoming the winner, all right. And what we are seeing is that $200 billion getting back into Bitcoin as people's greed is rising. People are looking for a more kind of what they view Bitcoin being built for. All right. Bitcoin was built for this, guys. This is why we have Bitcoin, why we have digital gold. All right. So when we talk about some of the data that is coming behind these market caps rising and decreasing, Charles Schwab, okay, has dropped 155 billion, okay, to 105 billion. Bank of America, the second highest losses with 43.7 billion. Wells Fargo with 15.7 billion, and JP Morgan Chase has an outflow of 4.59 billion. All right. Now, only one Morgan Stanley has recorded gains with $5.22 billion added into its market cap year to date. All right, so that is going to be interesting and kind of more curious why Morgan Stanley is an outlier. And I wonder how their exposure is actually done with some of the non-traditional assets in comparison to these other 4 banks. All right, so when we talk about Bitcoin has gained 69.07% in market cap. All right, now they have gained almost basically the difference of $538 billion right now from $318 billion. Okay, now that is what is going to basically absolutely demolish the return on investment on a year-to-date basis. And that is where you got to see Bitcoin's return is 65.42% year-to-date versus the return on investment for banks are 11.64%. And that is in the negative direction, all right? So Bitcoin is thriving, and like I said earlier, that is why Bitcoin was created. And this is the impact we are seeing basically on how the financial sector in the instability coming from inflation amongst other assets being not basically successfully held by these banking institutions. We are seeing basically a lot of trust issues. And we talk about the greed and fear index a lot. That is basically at its highest point, all right? Now, when we talk about all of these high-profile collapses, the surge in Bitcoin's price is basically going to be a surprise for most due to the fact that Silvergate Capital and Signature Bank, two of the most biggest lenders in the crypto sector, basically have went under. All right, Silicon Valley Bank is the backbone of the technology startup industry has failed. Okay, so will somebody buy these banks? Will they bail them out? Will we see a settlement and some kind of some liquidation of these assets and kind of recovery of these banks and have them see them reborn? And will this be basically scooped up by a crypto-friendly financier to take over these banks? All right, that is what I'm going to be interested in seeing. Now we see the worsen of the situation due to the collapse of Credit Suisse and the near collapse of First Republic Bank, which were saved at the last moment by their native countries. All right, so now when we talk about, when we see Bitcoin being the basically the hedge against systemic risks, including inflation, it has attracted a lot of investors trying to navigate the banking crisis as the fear is rising. Okay, so that is what has kind of been the end-all be-all as we look to achieve true decentralization when it comes to finance. Okay, so also we are going to see the retail side of things kind of follow suit, because when we see the markets move, a lot of the people that are just doing this on a retail side of things will follow the institutional players. Okay, and that is something that's going to be most evident by the fear and greed index as well. Okay, so now we are seeing what is crazy is that we are seeing the performance of Bitcoin being pretty much stable, and despite being volatile than traditional banking stocks. Okay, Bitcoin is being the true winner in the current market. And now this is going to be a continuation of its campaign to grow in market share, in market capitalization. All right. Now, what we have to talk about further is that the lower of or zero interest rate hike coming by the FOMC minutes that will be released tomorrow. Okay. So when this is coming about, what we are talking about, the uncertainty surrounding this, and especially in the financial sector, the interest rate decision looming is going to be crucial. Okay. The negative interest rate hikes continuing have had a negative impact on the crypto markets and traditional markets. Okay. So a zero or a lower than expected interest rate hike, even though we're supposed to see the 25 basis points, could possibly influence Bitcoin's prices to move one way or the other and stabilize the banking side of things. However, I do think the water that the banking side of things are stuck in is too muddy right now to have a interest rate decision impact that one way or the other, because they are still going to be in bankruptcy or near collapse. Okay, so that is what we are seeing, and it's kind of crucial to note that the Bitcoin correlation with these banking stocks. All right, so rule of thumb, Bitcoin prices have not really significantly correlated with banking stocks. Okay, they may have ran with them or similar, but it was for different factors. Okay, but now we are seeing the contrary. Crypto markets are performing better when the financial markets experience turbulence. Okay, so that's kind of what we're emphasizing in this article as we talk about why this money is leaving the institutional side with these 5 largest banks. Okay, that is what is crucial, because that money is being injected into the volatile Bitcoin asset. All right, so the altcoins should follow that movement, and that is something where, as investors, as you guys all look to try to make money and capitalize off of crypto, that is something where you need to kind of stick your teeth into thinking what possibly the ongoing impact we could see from this banking crisis will have on our crypto wallets. Okay, so the take-home message from this article is that Bitcoin has a higher market capitalization growth than the 5 largest U.S. banks, and that is surprising. Okay, it surprised me, a lot of my colleagues I talk with regarding crypto. This is what we are seeing, and it's just interesting because these financial institutions have been around for centuries. Okay, so that is what is going to be very, very monumental when we talk about Bitcoin just being a couple decades. Okay, and not even a couple decades. So that's what I want to see. The challenges are continuing. I do not see the softening and the basically risks being averted 100%, but we will probably have more clarity in the next coming weeks and months as it relates to the monetary policy and the banking crisis looming. Okay, so that's what I got for you guys. I hope you enjoyed this video. Let me know down below in the comments what you guys think will happen with the FOMC meeting or just the banking crisis in general. I want to know down below. But thanks again, and hit that subscribe button if you've not done so, and we'll see you all in the next one.